Welcome back to Investing Talk Podcast. Today we're focusing on Terawulf's upcoming earnings to watch, specifically for their Q2 2025 report. Our mission, as always, is to unpack the analysis. We've got a detailed pre-earnings document and really pull out the key nuggets for you. We'll look at what analysts are watching, what the history tells us, and maybe some potential scenarios. It's all about getting you informed quickly. Before we jump in, though, just a quick note. If you find these sessions valuable, please think about subscribing, maybe liking, leaving a comment. Your support really helps us keep this going. And hey, if you feel like it, you can always buy us a coffee. Also, definitely let us know in the comments if there's a specific company you'd like us to look into next time.
Absolutely. And, looking at this pre-earnings stuff isn't just about guessing the number. It's really crucial for getting a handle on the potential volatility and, frankly, what makes the company tick. Yeah. And with Terawulf, we're right in the middle of the crypto mining world. That brings a whole different layer of dynamics, doesn't it?
It really does. Heavily tied to the broader market regulations.
Exactly. It makes it fascinating, but also complex.
Okay, so given that backdrop, let's get into the nuts and bolts for Terawulf's Q2 report. What are the logistics?
All right, the report date is August 8th, 2025. That's before the market opens. And they've got a conference call set for 8 a.m. Eastern time. Now, analyst expectations. This is interesting. The revenue consensus for Q2 2025, it's not actually published yet.
Not published.
No, but for Q1 2025, it was $41.86 million. And looking back, recent quarters have been anywhere from, say, $20 million up to around $42 million. So there's a range.
Okay.
On the EPS side, earnings per share, the consensus for Q2 last year, 2024, was -3 cents. More recently, EPS has been, well, all over the place, -9 cents to +5 cents. Quite a swing.
Wow, yeah.
And one more thing, we couldn't find a verifiable whisper number for this one. Coverage seems limited. Right, okay. So that missing revenue consensus, that often means, like you said, maybe limited analyst coverage, or it could just be that it's still a bit early, or the sector's just hard to predict quarter to quarter right now. For you, the listener, that basically means less of a clear target, which can definitely pump up the uncertainty going in.
Makes sense.
And that EPS range, -9 to +5 cents, that just screams variability in profit expectations. It's not totally unexpected in crypto mining, it's volatile. But it means even a small beat or miss could really move the needle.
Yeah.
And no whisper number, no formal Q2 guidance from the company. That just layers on more uncertainty. Could mean more volatility after the report. What we do have is their past guidance, which was all about boosting capacity, efficiency, controlling costs, and trying to stay profitable at current Bitcoin levels. So that gives you a sense of their focus, at least.
Okay, so that sets the stage. To really get a feel for them, let's look back. How have they actually done in past earnings? What's the track record? Let's walk through the last 4 quarters. Q1 2025. EPS was mixed, somewhere between -7 cents and -1 cent. Revenue was $41.86 million, just a hair under the $42.43 million estimate. A slight miss.
Okay, a slight miss there.
Then Q4 2024. EPS between -4 and -8 cents, but revenue $37.43 million actual versus $35 million estimate. So a beat on revenue.
A solid beat, yeah.
Q3 2024, no EPS data readily available for the surprise, but revenue is $35.73 million versus $35.57 million estimate. A tiny beat, basically in line.
Right, pretty much met expectations.
And Q2 2024, EPS -2 cents to -9 cents range. Revenue, though, $20.39 million versus an $18.96 million estimate. Another revenue beat.
Okay, so looking at that pattern, what really jumps out is they're mostly hitting or beating on revenue.
Yeah, seems like it.
But the EPS is inconsistent, often negative. So for you, the investor, this kind of signals, well, they're growing the top line, right? Expanded capacity, maybe helped by Bitcoin's price sometimes. But translating that revenue into actual profit, that seems to be the challenge.
The bottom line struggle.
Exactly.
Yeah.
Scaling up doesn't automatically mean profit, especially here. And that raises a big question. How much of the stock's reaction after earnings is them versus just the whole crypto sector moving, especially with Bitcoin?
Good point.
Because we've seen huge volatility post-earnings. Big jumps, sharp drops, no real consistent direction, often just mirrors Bitcoin moves.
No, it's noisy.
Very noisy. The key trends we see are revenue growth tied to capacity and Bitcoin prices, obviously. Margins. Super sensitive to power costs and Bitcoin swings. Although, to be fair, their gross margins have been improving as they scale up. Economies of scale kicking in, maybe.
So they are getting more efficient operationally, it sounds like?
It looks that way, sequentially at least. But those external factors, power costs, Bitcoin prices, it can just overwhelm that progress sometimes.
That makes sense. So thinking about this specific quarter, Q2 2025, were there any big headlines, any major company news? Well, our notes say no huge facility launches or, game-changing announcements during the quarter itself. Their messaging seems consistent. Steady ramp up, focus on zero carbon mining, keep costs tight, manage their power mix. Pretty much steady as she goes operationally.
Okay, so nothing transformative from the company itself in Q2.
Seems not.
Yeah.
What about the bigger picture? Sector trends, macro stuff in Q2?
Well, Bitcoin's price is always the main character here.
Right.
Q2 saw, let's say, moderate Bitcoin volatility. Importantly, no huge crash, which definitely helps the miners.
Yeah.
But you've always got those background risks simmering, regulation worries, energy cost spikes. Those are constant threats in this space.
Always lurking.
Always. And we saw their peers reporting kind of mixed results in Q2. It often boiled down to who had the better power deals and what price they actually got for the Bitcoin they mined. And analyst commentary, like we said, coverage on Terawulf isn't huge, but the folks who do cover them, they're laser focused on a few things: mining output, cost per coin mined, and how fast they're scaling. It's fascinating, actually, how those same concerns pop up across the whole sector. It's all about operational efficiency.
Okay, shifting gears a bit from fundamentals to the market side. How's the stock itself been behaving leading up to this report?
Well, in the last couple of weeks, Terawulf shares have been mostly sideways, maybe slightly up. Seems like they're just tracking Bitcoin, which has been relatively stable too.
Makes sense, that tight correlation.
Yeah. And if you're looking at charts, that $2.60 to $2.80 area seems like a support zone, kind of a base built over months.
Okay, a technical level to watch. Definitely. Now, implied volatility. What's the options market thinking? It looks like it's pricing in a pretty big move. Based on the at-the-money straddle just before earnings, we're talking plus or minus 15% to 20%.
Wow, 15 to 20%. That's significant.
Yeah, it's chunky.
So that tells you the market expects fireworks, basically. High uncertainty, high anticipation. And just for listeners, that at-the-money straddle involves buying both a call and a put option at the current price. It's a bet on a big move, but you're not sure which way. So the market itself is bracing for a potentially large swing. That definitely raises the question of opportunity versus risk, doesn't it?
It absolutely does. It signals you need to be ready for a sharp move, one way or the other.
Yeah. Which brings us back to that earlier point. If Bitcoin is the main driver day to day, how much does Terawulf's own performance actually matter, the immediate reaction versus just getting swept along?
That really is the key question, isn't it?
It is. Short term, Bitcoin can definitely dominate. A big Bitcoin move could overshadow anything Terawulf reports, good or bad. But long term or even medium term, that operational excellence, efficiency, low costs, that's what lets them survive the downturns and really capitalize on the upswings. It's about building resilience, even if the daily chart looks like a crypto tracker.
That's a critical distinction. Resilience versus just riding the wave.
Precisely.
Okay, so pulling this all together, what are the potential ways this could play out when they report? Let's sketch out the scenarios. Bullish case first. What would that look like? Well, you'd want to see a big beat on mining output, maybe better than expected realized Bitcoin prices driving revenue and EPS higher than forecasts.
Right, a solid beat on the numbers.
And then strong guidance. Maybe they signal costs are coming down even further or their mining efficiency is ticking up significantly, showing real progress on that cost per coin.
Yeah, lower cost per coin would be huge.
Also, continued progress on their zero carbon power strategy could be a positive. It offers that potential cost advantage, plus the ESG angle some investors look for.
Makes sense. The green mining narrative.
Exactly. Now, the bearish side, what would worry the market? Obviously, a revenue miss or a much bigger loss than anticipated.
Yeah.
That could be due to, operational problems, downtime, maybe power costs spiked unexpectedly.
Any kind of operational slip-up, basically.
Right. And weak guidance for Q3 would be a major red flag. If they start talking about higher power costs coming or their hash rate stalling out or maybe increased regulatory heat.
Yeah, any sign of headwinds picking up.
Or just signs that margins are shrinking or they failed to boost their mining output as expected. That would definitely fit the bearish view.
Okay, clear bull and bear cases. So, if you had to pick one number, one metric to watch above all others in this report, what would it be?
What's the absolute key?
For me, it has to be the cost per mined Bitcoin, the all-in cost.
Okay, why that one specifically?
Because that number tells you everything about their efficiency and their ability to make money. It directly dictates their margins, especially with Bitcoin's price being so volatile, knowing their break-even, knowing how much buffer they have. That's critical for assessing their future profitability and resilience.
So it's the core operational efficiency metric.
Exactly. If they can mine Bitcoin significantly cheaper than their peers, or cheaper than the current market price allows for good margins, that's a huge advantage. It shows execution. It's where their operational skill meets the reality of the Bitcoin market. A low number there is a very positive signal.
Got it. Cost per mined Bitcoin. Keep an eye on that one.
Okay, let's try to synthesize all this. As we head into the report, what's the overall takeaway? What's the leaning from this analysis?
Yeah.
Based on everything we've discussed, the source materials suggests a neutral leaning.
Neutral, okay.
Yeah. And on a confidence scale, say 1 to 10, we're putting it at a 6.
A 6 out of 10. So some conviction, but not overwhelming. Right. The reasoning is, look, they've shown they can execute operationally in recent quarters. They've grown. But the crypto market is just inherently unpredictable. Regulation, Bitcoin price swings, and that lack of firm Q2 guidance just adds to the risk. It feels balanced on a knife edge.
That makes a lot of sense. A neutral stance reflects that balance. And it definitely leads to different potential strategies depending on your risk tolerance.
How so?
Well, for more risk-averse investors, given that neutral read and the high expected volatility, the advice might be to just wait. Wait for the dust to settle post-earnings. The immediate reaction can be wild and maybe not sustainable, as we've seen.
Sit it out, see what happens.
Pretty much. Now, for active traders or those comfortable with more risk, that high implied volatility could be played. Maybe with an options strategy like a straddle or strangle, betting on a big move but not necessarily the direction.
Playing the volatility itself.
Exactly. But you've got to remember, those options are already expensive because the market expects that move. It's not free money.
Right, the high IV is priced in.
Definitely. And for anyone trading the stock directly, tight stop losses seem essential. Given how sensitive it is to Bitcoin and any sector news, things can turn quickly. It really highlights how the same info leads to different actions based on your own approach, doesn't it?
It really does. Your own risk profile is key. Okay, so let's recap the main insights here. Terawulf's earnings. It really looks like a story of decent operational execution bumping up against the wild world of crypto markets and regulation.
That's a good way to put it.
So what does this all mean for you, the listener? It means that even with solid company performance, some sectors just demand extra attention to those big external forces. You're not just analyzing the company in isolation.
You absolutely aren't. And maybe a final thought to leave you with. When you're looking at companies in these super volatile, highly correlated sectors like crypto mining, yes, dig into that internal efficiency, that cost per mined Bitcoin. Crucial, but always view it through the wider lens. What's Bitcoin doing? What are the regulators saying? What are energy costs doing? The real question for you is, how do you personally weigh those internal company factors against the big external market waves?
That's the core challenge. A great thought to ponder. Thank you for joining us for this session, looking at Terawulf's upcoming earnings. We hope this helps you feel a bit more prepared. Keep learning, stay informed out there, and we'll catch you on the next Investing Talk podcast.